All right, traders, the small account is up 4.74% today. As expected, I finished Friday very strong. The small account is now up 21% plus since it started this Monday. Every single day this week has been green. Ended up making 22 trades in total, 20 quick scalp wins, and 2 small losses. The losses were microscopic compared to the wins because I always make sure that I size accordingly and never hold a loss longer than I would hold a win. So we're going to be breaking down the trade recap on how I was able to buy SPY put options literally towards the highs in the morning and also at the previous closing price when it reacted as a resistance level and then it sold off massively after getting into that position. I'm also going to be explaining to you the mistakes that I've made today. But overall, this week has been absolutely phenomenal, especially for someone who just played only puts. A lot of people who played puts this week, if you're, taking a look at this 5-day chart, you're probably thinking they got destroyed. Well, I didn't get destroyed because I didn't hold my puts. I got in, I got out like a sniper within minutes. I timed it perfectly. I got in at the top at the very moment, and I sold on the dip very, very quickly. And I took my small gains. When I'm up 10%, locked in the profits very, very rapidly. Most people holding puts this week got destroyed. But in terms of my portfolio, 22 scalps this week. 20 of them were wins, 2 small losses. The losses were smaller than the wins because I held less than I would hold the win. I cut extremely quickly. Losses were below 7% on the contracts. Every single day was green this week. The portfolio is now up 21.42%. It started with $3,941. The account balance is now $4,786. With that being said, in terms of the profits made this week just from the small account, it is over 2 times the cost of Trader Society, which is a lifetime access, one-time fee, instant access program. If you want to check it out, the link is down below in the description. That's where I'm hosting the small account challenge. So with that being said, I'm going to be recapping the trades and I'm going to be giving you an analysis on SPY in terms of today and where we're heading into next week. Let's get straight into the lesson. So I was on the voice channel today, ended up giving great commentary. Shout out to all the members within Trader Society. A lot of you guys had a big day today. Storo ended up making a 4.74% return on his portfolio. Same exact return on mine. Congratulations, man. We had a lot of big hitters, man. A lot of people killed it, say 11% on the portfolio. We've had some nice trades, man. 36% on SPY puts. Very, very nice trades, man. So big shout out to all you guys. 63% return on SPY puts, 400 strike. Roadblocks, nicely done. Account is over 10K, 5% return. There you go, man. $500 like that. Shannon, 77% return on the portfolio. My gosh. It's insane, man. Exclusive, I think he held the longest today, 136% return. That's like more than 6 times the cost of Trader Society. Isaac ended up making a 465% return on SPY puts. That's over 7 times the cost of Trader Society. One of the most consistent members within the chat room, consistently going green every single day. 2.50% return on the portfolio. Very, very nicely done. You guys are absolutely crushing it, man. Big shout out to members within Trader Society. Let's get straight into it. So why? Why was today such a great day for SPY puts? I'm going to tell you, and I'm also going to tell you the mistakes that I made in terms of not holding longer. So let's get into it. So first, overreaction to the upside. This is an overreaction to the upside. From 370s on July 14th all the way to $400, that's what we call a micro overbought move to the upside, right? So where are we going to buy the puts? Where are we buying them? Best level, like I said in yesterday's video, is at the previous closing price right here at, not at the previous closing price, at the gap fill level, 401.44. There was a gap to fill at 401.44. If SPY is going to break above monthly highs, we're likely going to see a micro pullback, a micro reversal at this 401.44 gap. So if I see the bearish reaction, I'll play puts there. That's the best level. Now, if it does not go to that level, I will play puts at this high of a level if the previous closing price turns into resistance. So into this morning, I actually played puts above. I played puts above. The reason why I played puts above at first, and this was the best trade for a 20% return, we had a lot of resistance in after hours. We had a lot of resistance in after hours at this 398.74. I was seeing a lot of bearish confirmations, a lot of bearish resistance forming towards this 399.7 level. I scalped puts very quickly right here for 10%. If I would have held a little bit longer, would have been like a 30% gainer on this same day expiration. And then right here, I sat out on this one. This was another great opportunity for puts. It partially filled the gap, hit the nice keyhole round 400 number. And it topped multiple times, man. When you see these bearish wicks at that major resistance from yesterday's after hours towards the partial fill gap at 4144, you know SPY is going to start to tank, and you're going to want to scalp some puts in and out within minutes on a same day expiration closest strike very, very quickly for a nice 10, 20, 30% gain rapid fire, right? Now, here's how you can really identify when it's going to be extremely bearish, where you can hold a little bit longer, or really identify where it's headed for the day. When it goes green to red like this, it goes green to red. When it goes under this previous closing price, that's when it goes red. It broke down nicely, and then you could see it reacted so many times as a resistance level, as a roof at the previous closing price. And when that occurs, SPY is going to have some nice micro pullbacks for scalps. You can scalp puts right here. It hit the previous closing price. Bearish wicks, bearish candlesticks, micro sell-off. That's a nice quick return with a scalp with options, especially if you're going with closest expiration, right? And you're getting in at the top candles. You're getting in when you see, okay, bearish confirmation, bearish top wick, bearish top wick. What are you going to do? Buy puts on the green candles. Buy a put here, buy a put here. It's already confirmed. Don't buy puts here at the lows on the dips. Buy the puts when it's ripping back up after that bearish confirmation. You should always be buying puts on green candles after the bearish confirmation. And then if it looks super bearish in a situation like this, where it turns the previous support, the previous lows of this 1 minute candle to resistance, then you can add a tiny bit, not much, just a tiny bit for a quick scalp if you like, and then just sell into the dip. But anyways, you could see it reacted as a resistance level multiple times, 3 times in a row, which is bearish. All these little micro scalping opportunities where SPY drops a quick 30 to 50 cents, you're looking at a 20% plus return within minutes, a 20% return within minutes. You trade the shares, that's like a 0 point whatever percent return. You ain't making any money trading shares unless you have millions of dollars to just throw into SPY like that for a quick scalp. You ain't making any money with shares. So if you scalp these options laser focused, you can make very quick returns if you know how to do it, like how I'm teaching you. You can make very quick percentage returns in 20% within minutes. Put in 10% of your portfolio, make a 20% return within minutes on a cash account. You just made a 2% return. Compound that like clockwork, you'll be rich in a year. And you can do that like 10 times a day with the cash account if you have enough money in the account. Like if you think about it, if you have $2,000 in a cash account and you're buying a contract that's at $2, a same day expiration or a close expiration, you can make 10 trades that day. Enter a trade at $200, exit, 9 more trades left. Keep doing that, you can make 10 trades that day. And I'm not averaging in. I'm not averaging my cost down. There are times where I will add a tiny bit into more confirmations, but I'm usually not doing that. I usually take my full size for the most part as soon as I get in because the entry is just so good. But anyways, this was the second best trade of the day where I scalp puts here. And again, the reasons why I'm doing this, even though the gap didn't fill, is because overreaction to the upside partially filled the gap. It topped out in the morning towards this after hour high, which has big downside potential. We're due for a pullback. Nice key whole round $400 number, failed to break out. Several fake outs at resistance. Several times the previous closing price reacted as a resistance. That's why I'm scalping puts. And Fridays, we see a lot of sell-offs when SPY's at resistance. People don't want to hold this over the weekend. They know it's going to sell off. So those are the reasons why, right? I want you to do this at the best prices possible, especially if the gap partially fills. The true best setup is when the gap fills, right? But if this previous closing price reacts as a resistance level at these key levels, I'm playing puts, even if that gap at 4144 doesn't fill. Like I said in my video yesterday, if you watched the video, I said, if it goes green to red, if the previous closing price reacts as a resistance level, scalp puts. Scalp puts right here. Scalp puts right here. Scalp puts right here. This was one of the best trades that I made today. Now, unfortunately, I didn't hold, and I'm going to explain to you why. So right here, it went above the previous closing price. And a lot of people are probably thinking, oh, it just went green. It's going to rocket back up. We're going to start to fill the gap. No, you have to see how a stock reacts when it goes red to green. You have to see how a stock reacts when it hits the previous closing price. Here's what we know. We know that it faked out at a nice key hole around $400 number. We know there's a gap to fill at 4144, best price to play the puts. We know there's major resistance from after hours yesterday at $399. There's now major resistance at $400. It went green to red. It reacted as the previous closing price 3 times as a resistance level, right? This is all leading to bearish confirmations that we're going to sell off, right? So when it pushes above the previous closing price, you then need to determine if we are going to see a shift in reversal, or is this overall trend still going to be overall bearish? Now, the reasons why the overall trend should be overall bearish is because of all the reasons I just gave you. The key $400 whole round partial gap close reversal level, topping out towards after hour highs. It already turned the previous closing price to resistance 3 times. Those are all the reasons, right? But if it goes above, you have to confirm if this is a floor or if this is a roof again. It was a roof for 3 times in a row. If it's going to turn into a floor, it's going to start to break out. It's unlikely for it to happen in this situation because, like I said, $399 after hours resistance. It sold off at a nice key hole around $400 number in the morning, and it reacted green to red 3 times, failing to break out for very nice scalps. So it's very unlikely that we're going to start breaking out here. So what you do is you wait for it to react as a roof and play the puts. How do you know if it's going to be a roof? I bought puts right here at 10:55 a.m. I alerted puts. Why did I do that? Because it formed the wicks, top wicks, top wicks, top wicks. If you see top wicks towards that previous closing price, scalp the puts. Now, here's more bearish confirmations. It retests the previous closing price, so it's already selling off from all these top wicks where I bought the puts, and it's forming lower highs. The highs of these 1-minute candles are now the highs of these 1-minute candles are the previous support levels. Look at this. Your previous support, your previous low in this candle is now the resistance, now the resistance, now the resistance. It's trying to break down, and right here it tried to break down. It went green to red again. And you might be saying to yourself, oh, there's a wick. It's going to try to rip up again. It maintained lower highs. This wick means it's going to try to push up. And you can see it did try to push up right here. But it maintained lower highs. As long as it doesn't go above these wicks, it's overall going to get crushed and sell off. It was such an easy trading situation because it formed those lower highs immediately. It formed the wicks immediately. And then as soon as the lower highs formed, after that, it went green to red again. And this is how you know it's super bearish. This is where you can add some, not where you enter initially. You enter initially right here. You can add some right here. When it turns the previous closing price, the previous low of this wick where it bounced into a resistance level, top wick. Top of this wick is now where the bottom of this one was. Super bearish at the previous closing price. And then right here, super bearish wick at the previous closing price, and it's lower. It's forming lower highs, forming all these wicks. It's going to sell off. It's going to get crushed. This is an A1 setup. So when the setup is this A1, what's an A1 setup look like? An A1 setup is meant to be held longer than a scalp. I scalp a couple minutes like a sniper, time it perfectly, get the best entry, get in, get out. Don't hold my losers longer than my winners. You want to cut a loss quick, make sure you hold your losses less than you hold your wins. If you don't know your average holding time per win, then you're not going to know when you have to cut your loss. You're going to have to cut your loss less time than you would hold a win. That's one way to minimize your losses. Size in accordingly, enter at the best entries. If you're bearish, wait for the bearish confirmation when it looks ugly, then buy the puts on the rip back up, on the bounce, not into the red candles when it looks ugly. I say that all the time. Bearish confirmation is confirmed. What am I talking about? I'm going to show you what I'm talking about right here. Bearish confirmation. It hits the previous closing price. It forms the bearish wicks. Do we buy puts into here on the low of this candle? No. We wait for the bounce. Bounce up, buy the puts on these rips. Do not be fearful. You should be more fearful after a bearish reaction when you're ready to pull the trigger because you got your confirmation. You should be more fearful in buying these puts into this dip, into these lows when it looks bearish than when it rips back up towards these resistance levels. You should be more in fear to buy the puts low than high. Remember that, but you have to wait for the bearish reaction first. Top wick, bearish. Buy the puts, but wait for the rip back up. Bearish confirmation first, wait for the rip back up, and then get in as high as possible towards those previous highs on those wicks at previous closing price. Boom, there you go. There you go, man. That's going to change the game right there. For micro scalping, in and out like a sniper. You want to get the best entry, you got to know where the best entry is. Wait for confirmation, time it perfectly, study the previous closing price, study the daily chart, study these videos. You will start to understand the best entries. This voice channel within the Discord is about to be a game changer as well. We got very positive feedback within Trader Society from the voice channel, and that is, I believe, one of the reasons why the profit section went through the roof today, because I'm showing up, I'm delivering in the voice channel, and I'm going to continue to do it because this is what I love to do. So, anyways, in terms of when you can really add into puts, right here, when previous closing price is confirmed resistance, and then right here, those are your last adds. Initial positions need to be taken here. And if you want, you can take some into the lower highs pop, but they need to be taken here on the top of these wicks, right? Now, here's the mistake I made on this one trade. I didn't hold, right? This was a trade that meant to be hold, right? So what does the A1 setup look like? What does the best setup look like? That means you need to typically try to hold. You don't have to, but you should want to hold a little bit longer than you normally would. So if you're normally holding like me for a couple minutes or up to 10 minutes, you're going to want to hold this for about 30 minutes to an hour. And within that duration of holding, you can make an extra 30 to 50% return on the closest expiration with this type of strategy. This is what it looks like. When the SPY or when a stock is having an overreaction to the upside, big move up on the upside since July 14th, it fills the highest, one of the highest gaps to fill above, right? Key resistance, bear market, put it all together, has the bearish reactions, right? So towards the top of these daily channels, those are the best ones. You don't want to be doing and holding this, like you don't want to be holding out poor entries on the daily chart, on the pre-market chart, on the, on the pre-market chart channels, on the 5-day channels, on the daily chart. You don't want to be holding at terrible entries. We know what a good entry is. We know what a good entry is to hold. If we were to want to hold some puts, we know right here, 4144. So if you get the confirmations at the previous closing price, hold the fucking puts, man. Just hold them a little bit longer. And I didn't do it. I took a quick 10% return. Does it work? Am I successful? Is it working? Yes. The results are phenomenal. Pull out a compound interest calculator and do the math. A 2% return compounded. You will see how fast your life will change within the next 2 years, starting with as little as you want. You will see how fast it can change. Ideally, you want to start with $1,000. You want to have some sort of cushion. You will see how fast it can change, man. Just look at the account. It's up 21.42% just this week. 22 trades were made in total, 2 small losses. All the losses were smaller than the wins, and 20 wins, and they were quick micro scalps. But the point I'm trying to make is there's a time and there's a place to be holding, and you want to do it at the best level and the best setups possible, right? So here's another example on Tesla. When do we want to hold some puts on Tesla? Man, big shout out to the guy. There was a guy, he kept talking to, I believe, it sounded like his wife. He kept talking to his wife earlier in the Discord server. If you guys were in the voice channel, you heard it. He said, I just bought puts on Tesla. I believe he was buying them when this was in the 830s to 840 range. He was buying puts on Tesla. He said, I'm gonna hold these out. It's gonna flip bearish. Man, he had a really good idea on that. But anyways, in terms of best levels for Tesla puts, like right here towards the gap fill, high gap fills, high resistance levels on the daily, this is when you want to hold a little bit longer, right? So what you're going to want to do is, if you want to take that approach on certain trades where you try to aim for a slightly bigger win and don't just scalp it, instead of scalping it for a couple minutes, you try to scalp it for like 30 minutes, an hour, and aim for an extra 30 to 50% win. If you do want to do that, you just have to understand it needs to be done at the best levels possible. And, in terms of when to do that, we've been speaking about it within these videos. So you have to have the awareness in the preparation beforehand on if the trade is going to be a scalp, or if this trade is going to be something where I hold it a little bit longer than I would on a scalp, right? So beforehand, have the preparation, identify the setup, identify the potential of the level, and understand at certain levels, you want to try to aim for slightly bigger wins. But it's not as easy as you think, man, in terms of holding. It's fucking tough, man. It really is. Like, just look at this. You could say right here, if you're scalping puts a previous closing price and you're aiming for a bigger win where you're trying to get out right here, or maybe you're trying to get out even if it cracks that and you're just holding, you could have just got in here, got out here, got in here, got out towards the dip, got in here, got out towards the dip. You could have done that 3 times, make a nice quick 20% return instead of holding through all that pain. You see, that's the thing. It's like you don't know exactly when it's just going to get it destroyed. There's ways to determine like when it's just going to get dominated, but it's like to know exactly when that big massive move is going to occur. It could be something like this, where it just trades in a micro channel, and then you're going to be like, oh, I should have scalped it. And then it's going to sell off, and then you're going to be like, oh, I should have held it, and going back and forth. It's not an exact science. It's not an exact science, man. But in certain situations, it does make sense to hold for like just a little bit longer. Like I literally got out right before the big dip. I got my entry so good, I can make a nice return on something so small. It dropped like 40 cents, and I got out right before this massive drop. In a situation like that, I should hold at least until right here. Like basically start getting out right around there. I would have made an extra 20-30%, right? But in terms of holding for something like this or saying it's going to go lower than this, that is extremely challenging. You're going to get caught up in a lot of chop and stuff like that. That's extremely challenging, tough to do. That's not my type of style. But in a situation like this, I strongly believe this was one of those things where I should have held until at least like 397, right? So that's my style. I scalp like a sniper. I'm very in and out. I'm telling you, man, if you see how I'm doing this with a small account, you will be shocked on how fast you can grow a small account conservatively and safely by taking small position sizes, by just having a small little win within minutes, and then your portfolio goes up 1%, and then you do it again, it goes up 0.5%, then you do it again, it goes up 1.5%, and it just amounts and adds up and compounds like crazy month after month. Every single week, as long as you're doing well, you're getting a small little raise, and then eventually, right now, a lot of people are looking at these small accounts and they're going, man, the returns on my dollars are so small. I'm only making $20. I'm only making $30. I'm only making $40. But what they need to realize is their percentage returns are exponential. They're making 1, 2, 3, 4% returns percentage wise. So if they compound that and keep doing what's getting them results and don't get off track and go all in and try to aim for these big wins and try to hold on, if they just keep doing what's leading to their success, those small little returns are going to amount to a lot once the account balance is huge. The way compound interest works is it starts off very slow. It starts off like this, goes very slow, and then it starts to gradually go up, and then it just goes boom like that. It's going to take about a year to get to that level. But once you get to that top level, like a year from now, those small little percentage returns of like 1% are going to be like $1,000 plus, 2%, $2,000 here. And then it just keeps on mounting. And then once you get to that level for a year from now, you can scale it rapid fire from making, you'd be surprised how quickly you can go from making $1,000 on a trade to $5,000 on a trade with the same percentage returns. You'd be surprised on how fast that can occur to go from, once you're making once a 1% return is like $1,000, once you're at 100K, you'd be surprised how fast that can turn into $1 million. And then from there, a 1% return is $10,000. And then it gets to a point where you might even start trading shares and not options as much, because you can just do this in shares if you wanted to. But I'm always going to trade the options. The returns are just so lucrative, man. But as your account gets bigger and bigger, when you get to that type of level, where the position size is just too big and it's too much liquidity, you're going to want to start, figuring out ways to improve the strategy. But as time goes on, as I'm growing the account, I'm going to continue to figure out ways to improve the scalping strategy. I want to hold it a little bit longer when it makes sense. That's my goal. It's just to hold a little bit longer when it makes sense. And there's ways to do that. If you want to hold a little bit longer, you can go with an expiration that's not the same day. It is very tough. In terms of these moves right here, these little micro moves right here, those are insane moves. These are insane moves with same day expirations. Insane if you're holding. Insane. Now, if you have an expiration that expires 2 days or 3 days, it's not as insane. They cost a little bit more. The percentage returns are a lot less. But if you're trying to hold it a little bit longer, then it's not too hard to hold those type of trades if that's what you want to do. I just love scalping these. The thing with me is I know a perfect entry and I know how to time it perfectly. So in terms of my style of trading, that's why I'm so attracted to same day expirations, because for me, it makes sense. Like if you think about it, I could make a quicker return than someone who holds longer because I have a same day expiration. That's the reason why. And my entry's better and I time it perfectly. I don't have to hold as long as them. So there's ways to justify this. You have to have that self-awareness of, okay, am I getting the perfect entries? Am I timing this perfectly? If not, then obviously I have to improve on that, but I should not be going with the same day expiration, because then I'm just going to be instantly down 10% like that, like a light. I'm telling you, there's tricks. There's tricks you can do with these contracts where it just makes sense to buy them. even if it doesn't look bearish or bullish at the time, it just makes sense to buy them in terms of the fluctuation of the contract, where within those minutes and seconds with this strategy I have, you can make a very quick 10% return on a scalp and just rinse that, put in 10% in an account, make a 10% return on the contract. You just made a 1% return on the portfolio and rinse that back to back to back to back so many times. I mean, you tell me what would you rather be doing? Like trying to hold puts, say you got in right here and you try to hold and then it rips up and then you hold, it rips up, then you hold, then it rips higher. Maybe you sell on the rip, right? Because you've had enough pain. Or would you rather just get in here, sell into the dip, get in here, sell into the dip, get in here, sell into the dip, get in here, and then sell into the dip? And then how can you make up for that lack of drop? You make up that lack of drop with the same day expiration. If you're doing this with a same day expiration, the returns are going to be so much more exponential in the losses as well. Percentage wise, not dollar wise, percentage wise. That's the key, percentage wise. I'm not full porting these. And I cut my losses quicker than I hold my wins. That's a key. You want small losses? Size in accordingly. Never hold a loss longer than you would hold a win. Get the best entries. In terms of best entries, like I said, wait for the bearish reaction. Buy puts into the green candles. Bearish reaction here. Am I going to buy puts at the lows on this red candle? No. Wait for the bounce back up. Buy the puts. Doesn't happen? Don't fucking buy the puts. Simple stuff, guys. I'm just saying, like, in terms of holding, it can be very tough and frustrating, right? It's not an exact science of holding. I do believe there's ways where you can say, the overall move is bearish, but the problem with that on a same-day expiration is it's like hell. It's a living hell to hold a same-day expiration for the overall move, especially if you're wrong. Because, if I think overall SPY is bearish and I buy a put right here and hold it on a same day, the fluctuation is just too volatile, too emotional to be holding. That's just the reality of the situation. Unless you're sizing in much less and you're, aiming for the big win and stuff like that. It all depends on your style, man. But it's stressful. It's super stressful, man. I'd rather just take the normal position size, get in, get out. Because if you think about it, man, on a same day expiration, that's hell to just hold through this chop, right? Now, if you have an expiration that's further out, it's not as hell. But then again, I could literally just make bigger returns than that person by just getting in, getting out, getting in, getting out, getting in, getting out, getting in, getting out. And maybe if they do hold to the end of the day through all that suffering, maybe they will make a bigger percentage return than me. Like, it is what it is. I love what I do, and I know what I do best, and it's scalping. That's what I do best. Now, in terms of these A1 best setups, I do want to get to a place where I just hold a little bit longer. Start off small, hold a little bit longer. Some ways I wrote this down, the small account challenge. So you got to identify these setups. They're very rare. They come around 2 to 3 times a week. They're very rare setups where it makes sense to hold a little bit longer. But like I said, it's not an exact science. Ways to go about it is you can go with an expiration that isn't a same day. That's one way to go about it. Probably one of the best ways to go about it, actually. Go with the next day expiration or the 2-day expiration. And then some other ways, like I explained right here in the small account challenge. What you can do is, here's how you can plan to do it. Beforehand preparation. Clearly identify what the best setup at the best price looks like. When your price alert triggers, so you set the price alert at the best price, best setup. When your price alert triggers, so beforehand, you basically have to identify, is this something where I would feel comfortable holding longer than a scalp? And if you agree with that, then, you set your price alert and you have that awareness of when that price alert triggers. You say, okay, this one is meant to hold a little bit longer. It's not meant to just scalp in and out like that, right? What you could do is you can scalp 50% how you normally would. You sell 50% and then you leave for profit quickly. And then you leave the other 50 to 30% of size left to ride a little bit longer. So in terms of a little bit longer, 30 minutes to an hour, right? So those are some ways, right, that I've identified. And another thing is, if you're trading the 1-minute chart, it's going to have you more micro focused. So you can do the 1 minute and the 5 minute in a situation like this. For the A1 setup, you can use a 5-minute chart instead of just the 1-minute chart. The 1-minute chart will be more for entries and exits, or more focused towards entries in a situation like that if you're trying to hold, not towards the exit. And you could draw a clear box zone. You can draw a clear zone of the chart where if you're trying to hold, you could say, okay, there's a lot of support here at this 395, at this 397 level. There's a lot of support towards the pre-markets in this 397 zone. That's going to be my target. I'm going to scalp the puts at 390, 399 right here at this previous closing price, and I'll aim for 397. And then you take profits along the way. What are some key profit zones to be locking in profits? Well, right here, it's been bouncing nicely off of this 397.60, 397.50 level, 397.70 level, right? So these are some ways, right? I did also have another trade. This wasn't at a good price. I'm willing to trade in a situation on a scalp where if I'm not holding long and it's not the best price, I'm willing to take the trade. I'll just size in a little bit less on the trade to because I understand the risk involves, and I won't hold it too long. I have to time these perfectly. I had a very nice trade where I timed it perfectly, and I did this twice. And again, this is extremely risky. The reason why I did this is because partial gap close reversal, the trend was bearish for the day. It looked like it was going to be one of these days in terms of how my strategies worked. It looked like it was going to be one of these days. This is why I did this. I scalped puts twice. And again, if I were to hold these, my God, the returns would have been so big. But anyways, this is a key level. This is a key level with big upside. This wick right here. This is where it bounced in the morning lows and rocketed back up above the previous closing price. 397.21 is a nice support level with big upside. If you look at the 5-day, 5-minute, where I just drew that red line there, you can visually see that pre-market support is very, very strong at this 397 level, right? And it's got nice upside potential. It bounced all the way to $399, forming these lower highs at the previous closing price from this level. So the point being is, if this cracks and reacts as a resistance level, and if you see that top wick form once it cracks that level, you're going to want to buy puts. And that's exactly what I did. It cracked the level, top wick, top wick, top wick. Do you buy puts right here into the low of this candle once it has the top wick and is confirmed bearish? No. You buy puts right here when it bounces back up and you see that wick. It's already confirmed bearish, right? So the max risk on a situation like that would be 397.40. 397, basically the high of this, 397.30 be the max risk. If it pushes above 397.30, it goes super bullish. If it maintains and stays under this, it goes super bearish. And instead of that big upside move that can happen, it has that big downside move. And the trend was overall bearish. So I scalped the puts, got in, got out, sold for quick 8% return, doing that twice. So yeah, that was a nice little scalp I had too. It's just, if you're going to scalp that low, you have to do it when SPY's on that A1 holding type of setup. When SPY's at, that high gap, major resistance, all the things that I explained to you, you can only do a situation like that when it's like that. If you're trying to scalp, a low of day breakdown on SPY when it's not at resistance on the daily, I would advise against that. I would not do that. I would not be trying to scalp it at these more poor prices. I mean, on the daily, it's not a poor price. So there you go. If it's a poor price on the daily, best fucking entries at resistance. If it's an amazing price on the daily and the overall trend is confirmed bearish, then you could try scalping puts a low. But that is super advanced. Would not recommend those last two trades that I did there. That's super advanced, and I sized in very, very lightly on those. But these were the A1s. Boom, 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 and boom. All 4 times. Quick scalps. Those are the A1 setups. A1 setups, man. If it can't turn that previous closing price into support, it's going to snap off a cliff. And like I said, wicks, lower highs, cracks, top wick, big sell-off. That's how it goes. Save that pattern at the previous closing price. Save that pattern when stocks and SPY fill those gaps. You'll be on track to make some nice money. Scalp in and out very, very quickly, close to expiration, and then buy the puts how I explained to you. So that's going to wrap up today's video lesson in terms of where do I believe SPY is heading. Overall, you're just going to have to wait till Sunday. On Sunday, I'm going to give an analysis on where I believe it's heading. I have to do a little bit more research, a little bit more technical analysis. This was mainly a recap focused video on the day, but it's not looking too bullish, but it does look like it does want to fill the gap. It does look like we do want to go to 40144. So best level for puts heading into next week will be 40144. That is the best level for the SPY puts into next week. And then, of course, a key level of interest will be the previous closing price, which is now 395.09. There's going to be an in-depth video with the best options to be trading at. Look at all these plays sold off hard, man. I told you guys what I tell you guys about NVIDIA, man. I told you guys, NVIDIA filled this gap at 180.48. reacted as a resistance 2 days in a row, play the puts. Once it has that red day, today was the red day, play the puts, boom. NVIDIA had a gap close reversal just like we were anticipating on SPY, and it sold off. Very nice little micro bull trap in terms of day trading. In terms of swing trading, these can easily pump back up. I could easily see SPY going to 4144. So there's going to be a more in-depth video this week that will prepare you. Just know 4144 will be the best level for puts, and the previous closing price of 395 is a strong level of interest in terms of trading into next week. And that nice $400 whole round number will be nice as well. And then on that other one, what was the other one? META had the gap close reversal as well. META had the gap to fill right here at 184. It fills the gap, sells off, has a massive reversal. Man, what a nice play that could have been. So, yeah, hope you guys enjoyed this and learned a lot. That is how you trade the best setups at the best prices. If you do want to be a part of Trader Society, you can use this weekend to start studying. You could study the video lesson library. You could study the live streams. Every live stream I do, live trading streams, they're all recorded. You can go back and rewatch them. You could see the trades that I made live today. You could see them right now. You could see them. They're all recorded within the Discord chat room. You can also see the video lesson library. That's where I teach you how to trade the price action strategies. I show you how to trade the best setups at the best prices, the unique price action gap trading strategies. I also show you, and most importantly, risk management, position sizing, how to protect your capital. Most important things within trading. That's my biggest edge with this, along with the best entries and the perfect timing. It's the risk management I truly have. The number one rule of this small account challenge, the main rules: get the best entries, get in, get out quickly, never hold a loss longer than a win, keep the losses very small, never have a big loss, never have a big red day. I'm just trying to position myself more where I can have bigger green days than I normally would, even though I don't need them, because the red days are microscopic and so far have been non-existent. With that being said, in terms of the small account challenge, with that being said, you get access to all that along with the Discord server, along with the voice channel and the live trading streams at Market Open that we do every single day, along with all the members and the networking opportunities within Trader Society in the real-time trade alerts, especially on the voice channel. The only way to make an alert possible in real time is on a voice channel. Live streams have a slight delay, whether it's 10 seconds, 30 seconds, up to a minute, whether what country you're in. Voice channel is 100% real time. Typing out the alerts takes time to send out the alerts. In terms of scalping in and out, a voice channel is the best way to do it, and that's what I'm planning to do moving forward. Plus, you'll be able to see the live trading stream and open and close positions in real time. If you want to be a part of Trader Society, now's the best time to join. And also, for limited time only, get access to the small account challenge. This is something where I rarely do. You're not going to be seeing me do this often. This challenge is costing me some money in terms of, scalping. I normally do this for a large account. This is something you're rarely going to see me do often. I'm going to have this title where I turn this amount of money to a lot amount of money, get my title, and then from there, I'm just scaling exponentially with the large account. And one of the ways that I'm making up for my income is, I'm participating in some upcoming investments. I'm also participating in some upcoming swing trades that I'm planning to size in on very nicely. So that will help with income as well. And then, making scalps as well with the large account, especially if the cash account has used all of its cash for the day. But regardless, this has been phenomenal, guys. Great start to the challenge. If you want to join us, it's the first link down below in the description. I will see you guys in the next video lesson.